Hello, it's John Smallwood, Senior Wealth Advisor with Smallwood Wealth Management. And today I wanted to dive into something that I think would be very helpful for a lot of people. Eddie, it is John Smallwood. How are you? Welcome to the podcast.
I'm good, John. How are you?
Good. So I've been talking about the 9 core principles of navigating pressure for a while in different formats over the last 15 and 20 years of doing this. And you've been working with me for about 12 years now. And when you came on as a client, this process wasn't really formalized the way it is today, but the conversation had been there. And I wanted to kind of pick your brain about that experience. And I wanted to as we evolved this and became a more formalized process, what you're hearing from people as far as pros and cons and about the conversation and the aspects. And then I want to dive into some of the aspects of this navigating financial pressure, because we know financial pressure comes from so many different locations, so many different spots in a client life. And now in midst of what we're going through, we're seeing a lot of different financial pressures or more exaggerated financial pressures in a lot of cases point in time. So the floor is yours, young man.
So we obviously knew each other, and I kind of knew what you did, but most of my career was on Wall Street. Since I was actually a young man going through college and all that, I've been working on Wall Street, and I did a lot of different things, but for majority of it, I ended up on the floor of the New York Stock Exchange and was a floor broker. So, and we started talking. I think it was around 2007, and we started working together with my plan, and I can say that I've worked with a few people before that. The conversation was different, because, and what this not financial pressure guide gets to is that when we started talking about me, it was about more of a holistic. It was a macro approach. It wasn't so much. I got some accounts, John, and I want you to manage them. It was deeper than that, and so we started working together, and that was what kind of drew me to you when I really realized that was the conversation. So when we got started, we started working together, and then I got basically downsized in my position as the floor was getting more and more electronic. And we started, you pulled me aside and said, why don't we go have breakfast and let's go talk? And I said, okay. And you kind of said, what about working with my dad and I? And I'm like, I could see that because the conversation wasn't, hey, I'm going to go out and cold call people basically and try to sell somebody a product. Okay. That's not what this has always been about. This has been about strategy. And so I think my exact words is, oh, I would work with you in a heartbeat, just because that made sense to me. Going through this process made sense to me as a person who was developing a financial plan, had different goals and different things I needed to get done for my family, and get through some things in our life. Let's call it college for the kids is one of them. So
at that moment you had a lot of financial pressure on you.
Yeah, right. There's financial pressure and all the other stuff that goes on. So because I think, here I am. I'm coming from the Wall Street side. So, investment is pretty much the conversation, right? And I had gotten some protection pieces during the year, and it was your typical thing, like somebody says, you need to go do this, and go do it. And I think I got a disability policy and I still have it, but really didn't know why I had, I knew why I had it, but didn't really know anything about it. And, you know, so we start working together, and this conversation, when we sit down and we start doing the exploratory work with, a new client, and then even existing clients, it really circles back to that. But and that exploratory work is this financial pressure guy, because when you really start talking to the client and ask them some really key questions, it's really about them and what's going on in their lives. And these 9 core principles all are part of their life and their plan. And it's specific to them and unique to them. There might be similarities between people, but there's always some nuances, personalities, whatever the case may be. There's always a difference.
A dog and a house and a mortgage, it's still different for you and your neighbor. It's still different.
Yeah.
You have the
How many years into the mortgage? I may be 2 years into my mortgage, and my neighbor's 18 years into or 8 years into the mortgage, something like that.
Yeah.
It's always different. There's always, and so as we go through this process, and and I've learned it more and more, and it's ingrained in me. And at the time, let's take a step back, when we first started working together, I think it was really encompassed in a planning software that we were using at the time, and that was really important, because it was what was bringing out the conversation, but it was complicated. So as we evolved, you and I, and our relationships and our with our clients have evolved, this has really bore itself out to be, especially right up front when we start talking to somebody, and it's a half-hour conversation. Sometimes it goes longer, just depending on the complexity of the conversation. But when people start having the conversation, and they realize, it's not about, oh, how much do you make? Oh, and the person on the other side of the phone is probably thinking, well, he could probably invest a lot of money, and I can get, so much going into an account every month. It's so, and that's what happens in this industry is, these things.
Yeah,
you fall into these little traps, right? And it's like, and it's terrible.
Leading with, here's my great product, or here, buy this, and there's no conversation. And, oh, you got $500,000. Let's go invest it. And here's my hammer to go invest it. Nothing about the color behind the human being and the family and the whole dynamics.
Right, and that may end up be one of the things that gets implemented, but it's not leading the conversation. And I think that's the important part of this, because you really got to understand them. You got to really understand what's going on, and everybody's different. I've had clients say to me, how do you know to ask that question? Or how do you know? I do certain things, and I have them do certain exercises where we're getting involved. And there's reasons why I ask that, because I need them to get to a place where they're actually change their thinking, because there's been so much thrown at them over their lives, whether it's opinion and bias or bad experiences, And so when you start walking through this guide and these principles, and it bears itself out over and over each conversation, this is the starting point, and then it really grows off of it. And so, everybody they get where we're going, because they realize, like, okay, that's why they've said, wow, this is it's an in-depth conversation without having a lot of detail. You don't need to have the exact numbers,
right? Because the numbers don't really matter, and it's that, it's not like we have 900 questions that we're going to force you through, right? Like, how you got to that question was a result of question 2, 3, 9, 10, and 11 being, triggered. Like, that next question triggers a thought in your brain that asks that question. And that question has never been asked to that person that you're talking about.
And it's funny because I'll go through we start talking about the different, we'll call the 9 core principles, and I'm on the second core, and because of a question was answered there, I actually go back to number 1, the first core, because it got me thinking about something else that maybe maybe either didn't fully understand, or I wanted to ask a deeper question, and it's usually the latter.
Correct, and it's that clarifying of when you ask a question later on about something else, you got to go back and understand, did I really understand what you said earlier correct?
Right.
That it's that, and I think one of the things that was a big shift when a little bit after you joined us, I don't remember exactly when it was, but the way the financial services industry has been designed is like there's this pitch about, how great we are. Here's all our good stuff. Here's everything that we do, and you should want to do business with me. And you have all these like pitch books about us, and that's how the industry works, right? Mm. And I don't remember where I was, but I remember coming back from somewhere and going, I am so sick of that, because it's really not about us. It's about the client. It's about that conversation. If we don't understand that, and I always position this as this wealth curve conversation, navigating financial pressure, it's about you. And if in that 30, 40 minutes that we spend together, we're not talking about you, we're talking about how great we can be for you, that's a waste of your time. It's a waste of everybody's time, because I really want to know, can I help you? And if I can help you, I want to work with you. And if I can help you, you need to, you need to find somebody else. But it's that the success comes from opening up and really talking about the core.
The funny part too is, and you're right, because I usually position it like, I need to understand and get to know you better. And during this process, you're going to get to know me better, and you're going to find out whether I'm the right person for you. And not because I'm sitting there going, what I do is great and all this. I think it's just by the questions I ask and how I'm really structured at looking at you. And I think they realize I do have a vested interest in really wanting to help them. And that's ultimately the goal, right? And then it's funny, if I sit here thinking about it, what you were just talking about, it was that usually at the end of the conversation, as I'm wrapping up, they're like, they're concerned about how I'm going to get paid, and I haven't even brought it up. I haven't even talked about it. It's not, high on my priority list. Is more, I need to find out about you. That's my priority, and I'm like, oh, okay, yeah, this is how it works. If you really, but it's never the focal point. It really isn't. It's like, and I'm laughing because it's funny sometimes.
It's so funny because what I learned over like this month, May 4th, this is April 28th, where we're recording this, May 6th or 7th, 30 years ago, I graduated from college and I joined the industry, and I've been on this journey for 30 years. And when I graduated college, I thought I was very, very knowledgeable. I thought I knew how to solve all the world's problems. And I entered into this financial services industry, and I was a very, it's been a very interesting 30-year ride. And I think, that what that event, whatever event that was that I was at, said, I came back and I remember talking to you and saying, we do this anyway, but the meeting ends up being like 2 hours to open up a new client meeting. So we're talking about ourselves, then we're talking about the client. And I said, I think I remember saying to you, we're just gonna start with the conversation. We're not gonna talk about ourselves at all, because you can read my website. Like you don't need me to talk about myself. We can talk about ourselves later, but that's not the important thing. And I said, let's just start doing this. And we started doing it not only with new clients, we started doing it, which we're always doing in the reviews. Our reviews were always based upon, hey, what's happening? And I think that change point for us really, to me, the whole process and the whole working with clients became a lot freer and a lot more enjoyable because you were no longer positioning yourself as, the end all be all financial advisor. And we're going to, or here's my miracle product that's going to solve all your problems. You and I have never believed in that. That's always been my thing. It's the coordination of the products. And
so some observations from, my, whatever it was, 20 plus, 30 plus years on the street, and then coming over. And so I'm sitting here, and the reason I'm going to say this is because like you said, we really don't talk about us. Like usually when I'm talking to somebody new, I'm always like, you really go to my website and go look, and you're going to get a really good idea about what we do and how we do it. And then we could, and then if you have questions, let's talk about it. But because when you look at the website, there's 50 plus podcasts on there. There's kind of full transparency in what we're trying to do and how we do it. And the reason why I said I came from being 20, 30 years on the street and then coming over, I was always, you protect, you got to protect your intellectual capital of this. And what I've learned in the 12 or 13 years now is that, and you taught me this, it was that we put it out there, we share it. When we're at these conferences and we're with our peers and you're sharing everything with them, and which was a total 180 for me. Like, I'm like, wow, why are we doing that? Why are we? I don't want them to know I'm unique. I'm special. That's not what makes us, what makes us unique and special is how we interact with our clients, how we day to day service that client, how we're really looking out for their best interest. And I've said this to you a million times. I think a lot of people, the right people that get into this industry are in it for the right reasons. They're usually in it because they want to help people. And if you're there for that reason, the monetary compensation that comes later, and that takes care of itself. But if you're coming from the opposite, where the compensation comes first, that it is glaringly obvious in our industry. Everybody knows that, right? You're getting cold called and you're getting pitched at the miracle product, as you said, or this and that. It's ridiculous. It's really ridiculous. So and people don't know. The problem is people don't know differently. I can tell you, like, I wish I had the level of knowledge that I at 25 and 30 years old, and had some guidance that I have now, but
you couldn't get to where you are without all the, let's just call it mistakes, setbacks. You couldn't be as strong. You couldn't be as strong as you are now.
Right. I mean, I'm really happy. My nephews are working with me, all three of them. And and I was like so happy because I'm like, oh, I am going to impart on you guys stuff I wish I knew. And I'm, so I'm happy for them. I'm happy that, they, not just it's me and I'm giving them this great knowledge. It's just that they're going to get a different view than what most people get in this industry. And again, it's not because we're so wonderful and great. It's just the way we go about doing it is just it's different. It's,
And the reason I'm doing this series of podcasts and I'm putting out this, navigating financial pressure guide, right? The 9 core principles we're in the middle of COVID-19. We're in the middle of another financial crisis that continually repeat themselves over and over again. And one of the things that I wanted to do was I wanted to get this conversation out to more people so they could benefit from it. The podcasting concept, the distribution, the download, the guide, it's all free. Is you have to get with somebody that's going to give you this conversation. And I wanted to do this podcast the last one that I did, this one, and this series of podcasts, to let people understand, like, you need to have this conversation with somebody, whether it's your brother, it's your father, it's your sister, it's your wife, your financial advisor, it's us. Having this conversation, and we in the guide we have this wealth curve pressure identifier form that we've created, which was basically, it was in our head. We were doing this conversation every day, and I said, let's organize it in a way that I think makes the most sense, and let's start with the most important thing that has the most amount of impact on everybody's lives, which is the unique dynamics of your family, right? And I think that when you start to think about, like, if you're working with your nephews, right? Well, it's, or you're working with your father, right? Or you're working with your uncle, you're working with your brother, you're working with your next door neighbor. The dynamics of the family dictate the what I call financial pressure in the plan. Now, pressure is both positive and negative, right? So,
Yep.
you think about it. You're married. Well, how long have you been married? Are your parents here? Are they assets? Are they liabilities? Do you have to, are they living, with you? Tell me about your spouse's parents. Are your
The
kids?
siblings and the dynamics between the siblings, and could be an hour conversation.
Right, and that chemical makeup, that DNA mix of all those personalities has an impact on the financial strategy that could either dramatically enhance or dramatically derail the plan.
Mm-hmm.
Especially right now, what we're seeing is, I'm hearing of people, well, we all know about this, like, hey, mom's moving in because she doesn't have enough assets, or I got to help her out with an apartment, or that's something that's not factored in to your financial strategy. And then all of a sudden you got $1,000, $2,000, $3,000 a month in outward expenses that you weren't planning on. That has pressure. That's going to create a reaction somewhere else in the plan. But without knowing, do you want to have a wedding for these kids? Do you want to have sweet 16s and bar mitzvahs and bat mitzvahs? What's the college going to be like? Is it going to be, you really, that conversation about the family really gives us the insight of how a person feels about their family, how they want to protect their family, how they, what their obligation or what their role is in that family. And I think that conversation has unlimited opportunities within inside of it of conversation, meaning who knows where it's going to take you.
Yeah.
I mean, I'm dealing with so many people now where, parents are in their 80s, 90s, and people fighting about stuff that's not even, shouldn't be fought about at this moment. There are, how many people have we talked to? Well, I have a special needs kid. And then you're like, okay, well, what are you doing with that special needs kid, and how that kid going to be cared for if you're not here? And they're like, what? Or, oh my God, I've been wanting to get to this. I'm just so busy that I don't have time for it. A lot of the recommendations coming from the dynamics of the family, and sometimes protecting you from the family,
Mm. Yeah. And
it's tough.
Because it all stems, a lot, like I said to you, I think early in the podcast, it's like people, that's the lead, the first box that we talk about. And I joke, I never have enough room to write all my notes, and I'm a note taker. So, I laugh, I always tell I have to have a separate piece of paper. I've got it written all over the place. It's that important, right? But early in the podcast, we talked about, you end up talking to somebody, and then right away they want to know how much you make, and what assets do you have, which is later on, I think it's box number 7 or something.
That's important.
That's really not the driver. When you think about your life, And if you really what you value, then maybe some people value their assets more than their family, but I think most of the people we work with value their family more than their assets.
I can say all the people that we work with value their families more than anything else, but that's, some of them don't, but,
Well, I'm saying, well, you may run across somebody that maybe, some people are very focused on assets,
yeah, true.
Uh,
So
but
I think when you start talking about, it's very clear how the family is going to put that financial pressure out there. But then there's you start talking about, you mentioned income, and you start thinking about where the income comes, how the income is paid. Are you self-employed? Do you have business partners? Now that expands that family conversation because, the business partners they're either,
they're
in the
they're
inside of the
extended family in so many words, right? They're like,
or they're on the outside of the family. Where are those? And they're directly impacting that. And then one of the things I'm most concerned about right now is the resilience of that income stream. Where is it coming from? Is it breaking down? Can it be broken down? What's going to cause it to be broken down? And that's a really important part of the conversation in light of what we're doing right now with navigating pressure is, if you have pension income and you've got strong guarantees and great, if you're a business owner and your revenues are halted because you're shut down and your liabilities are high as a result of it, that's going to put pressure in other places, and how you prepare for that and how you weather that storm is something that when we design the plan, we need to understand where this income comes from. Not to me, I don't care if it's 200,000 or 2 million, or 20 million. We've seen all those incomes. We've seen 20,000. It's not so much the income. It's let me understand where it comes from and how resilient it is, and then we can really make a good plan. I mean, so many people that we've been talking to, that I've been talking to, new people over the last 2 and 3 years, don't really have, as we all hearing on the news, the rainy day fund. That's one of our big important parts of our process, is making sure that the liquidity is in place so that if the resilience of the income backs down, you have some backup. But that whole diving into the income, there's so many nuances within the income.
yeah, and it's funny. As we were talking, I'm kind of thinking about 2008 and our current environment. And back in 2008, the business owners, it wasn't an earnings issue. A lot of it was a credit line issue, right? Because the financial structure was breaking down, and or potentially breaking down in the country, right? So credit lines were being held up and this and that. And so how do you fund your business? It's the same problem, but different, coming from different places. It's still, now, well, my business, I'm not earning, my lines are okay, and I potentially have some access to some federal plans, but there's pressure. It's the same type of thing.
So, like connecting to the PPP loans, which is a brand new conversation, is that enough for the business owner to keep the business open to get to the point where they can get back to making money?
So having those conversations with them, and then, like you said, the rainy day fund, or this and that. There's been a lot of news out about a lot of companies bought back stock last year, and that maybe they used up their rainy day fund instead of being better capitalized. It's the same, whether it's a billion-dollar corporation or it's a smaller business. It's principles are kind of the same. It's
I have a client that years ago sold the business, and the husband passed away, and the revenue is still flowing from that buyout, but it's an important part of this person's cash flow, but they're playing games with the revenue all the time, right? So it's when you start thinking, our job in this is really understand, where does it come from? Where does the income come from?
How's it derived? Yep.
Where does it, what causes it to break down? And in a lot of cases, my focus typically in normal environments is, how do we make it bigger? Like right now I've been more in a preservation mode, but I'm also, for the business owners and the people that are, this is a fantastic opportunity to dramatically leverage the income that you receive from doing what you do. And I'm having those conversations with a lot of people, whether they, if they're in sales or they're working with companies, it's a fantastic time to rethink, how am I going to reinvent myself for the next 10-year period? How do I take my business and make it more efficient? And that's the thing that, when we start getting into the business owners, their financial pressure, financial leaks, right? There are leaks in your personal plan and there are leaks in your business plan. And those leaks are bigger in the business normally than they are in the personal plan. But a lot of times they're the same leaks. I mean, I'm guilty. I looked at some of my leaks recently because, I had a little more time, and I'm like, that leak is happening on both sides, in the business and personally. Stop, stop.
Well, it's funny, through this recent situation environment, that, as stress is put on, whether it's the personal plan or the business plan, you either can do nothing or you can address it. And when you start addressing these things, then you can start coming up with solutions. And at least knowing about it is a better thing. We've always, that's what, having this conversation and then listen, you're having it with, potentially you or I, right? And we talk about this. There's the accountability. And yes, you could have it with your, you said earlier, you're going to have that conversation with your spouse, or maybe if, one of your parents, somebody you trust. But, when you really bring it out, and let's say with us, we have no, what do you call it?
Emotional attachment to it.
Yeah, exactly. Like we're just looking at it, and a lot of times, and this too, is as we're going through this, we already know that where there are potential issues or there's concerns, because we've been through this and so many times and seen so many different ones. It's we're experts at it. That's what we do, right? And having that conversation, it really bears out a lot of things, and you come out better on the other side. If you really want to address these things, you will come out better on the other side.
And a lot of times, like when people have looked at this and I've gone through it with them, it's like, okay, I understand my family dynamics, my income, my taxes, my savings rate, my debt structure, my lifestyle, where my assets are. I'm going to have to put 2 kids, 3 kids, 4 kids, 8 kids through college. But with all this information, what do I do? More importantly, what do I do first? That's the thing that I've come to in the last couple of days. It just kind of struck me as I never looked at it. It's like, okay, I got all this information. What do I do? And that's where having it with us is sometimes better than having it with somebody that doesn't know what to do.
Well, and we've had conversations with some very, well organized, well structured, intelligent, really on the game, have done, their research, but they're still missing nuances because it's not what they do every day.
It's the coordination. It's understanding the dynamics between where all the financial pressure is coming from, and it's those dynamics that once you understand what is and where it's coming from, now you can that organization of all these components and how you put it together and how you reduce the pressure, because the whole key is to reduce the pressure, and it's not just the financial pressure. What I find is that when shit hits the fan, this is not a PG podcast, I realize. So when shit hits the fan, right, is if I have everything in the right place, I have all these backups and cash in the right place, I'm not as concerned as when the shit hits the fan and I, oh my God, I don't have enough, right? That's where you get really stressed out. And the whole key is to provide that that, that confidence to ride through this. Because we all know 16 months from now, sooner or later, longer, I use 16 months as just an arbitrary date, things are going to be most likely a lot better. It's what I do right now that's going to make a difference where I am. And I always, I've been talking about this, and that's the long term of this, is the next 15 years is the most important part of your entire financial life.
Mm-hmm.
If you're retiring, the first 15 years of retirement are the most important part. If you're building your business, the first 15 years, if you make it 15 years and you own your own business, it dictates your future. Like the next 15 years is the most important. But the reality is right now, it might be the next 3 months so I can get through this.
Mm.
Right? And it's how do I survive through this? How do I reduce my pressure or put enough in place to get through this so that when the bell rings, right, and it's safe to go out and make money again, and we know, where we stand, we know, is the death rate, reasonable, and the infection rate, and we can stop people from dying and all those wonderful things. Can I, am I ready to take advantage of this? And I always use the term, and I've said this in many of my podcasts and many of my things, is that my grandfather used to tell me as a little kid, I spent a lot of time with both of my grandparents, but it was ready money is Aladdin's lamp. And I used to look at him like, what are you talking about? Right? He goes, well, you know what Aladdin's genie lamp is? I'm like, yeah, I know what that is. And he goes, you have cash here in your pocket that you don't have to pay the mortgage with next week. That's ready money. That's available money to take advantage of any opportunity that you see. If you don't have that ready money, you're going to be like, and he said this to me, he goes, you're going to be like every other schmuck. You're going to see the opportunity, have no resources, and just watch it walk by you.
And it's funny.
Have a shitload of regret. You're going to have a shitload of regret. And he said that. I don't know if he said shitload, but I'm saying it now. But I remember it that way. You're going to have a ton of regret.
So, and as we walk through this document, and we're walking through the principles, in the way that we do, it becomes very evident to the people that go through the process. They see it. They see where, they see where their potential issues are. They know it. And there's some other things that they don't. So there's other things that they don't know, and because they just don't see it. And that's the reason why we're having the conversation. But the part of where you're talking about ready money is Lattice Lamp. I don't know how many times I had the clients, they've done a really good job and they have that liquid cash available. And they're like, oh yeah, it's sitting in a savings account and the bank is calling.
It's making nothing.
Well, and that's besides the point, but but who cares? The bank is calling them. The bank is calling them to get them to do something with the money, and it's and it's not put it into a CD.
Talk to the financial advisor at the bank.
Yeah, exactly. And I go, no, they're trying to take you down their rabbit hole, which is going to help them, but ultimately derail your plan. If something like what's happening right now is happening.
Right. And it's that now you're in the rabbit hole and you've lost your liquidity, and now you're like everybody else. You can't take advantage of it because you don't have that backstop.
Oh, guess what? Either now I'm selling out whatever they got me into, or now I'm taking a home equity line, and that's another thing that they're getting to do. And
I'm paying more money to the
institution, right? That financial
transfer more money for myself.
Right. Who's winning? Who's really winning? And that's because you didn't want to hold on to cash. I had
somebody, we had set up a plan, I had somebody that set up a plan. They were young. They were going to have a second baby. Person was going to, take some time off on the second baby, and, had a nice amount of cash. And, the uncle was with an investor guy, why isn't that money working? Why does it make sense to have it at 1% sitting somewhere? And he guilted them into investing. And I'm like, it was part of the plan. It was part of having the liquidity. So when you weren't working, you could burn some of that cash up. And we had a plan to burn up about 40,000 of it over the 18 months.
Right.
Oh, yeah. Oh, no. Where's that money now? Okay. It's down in value. So it's
core values.
Dynamics, all of these dynamics. You start thinking about the family, you start thinking about the income, you start thinking about the liquidity goals. You and I have reviewed, thinking about like taxes, right? For a second, there's so many new tax, laws that are out. We have the Secure Act that came out December 23rd, which changed IRAs, and that requires so much rethinking of planning. And now you have CARES Act, which is impacting and opening up loans and putting people into more traps. But when we start thinking about it, if you're a business owner or somebody that works for a large corporation, the amount of taxes that are being paid that are leaking out, there's so much opportunity to save taxes, and most people aren't focused on it. And what I find is, when you are working with your advisors, typically it's like, what happened last year? But rather than what am I doing right now that I can reduce my tax exposure, not only today, but going forward in every single year. And, unfortunately, this financial pressure that we're dealing with now opens the opportunity to do some interesting things with potential Roth conversions and other related things because of income levels being lower. Roth, RMDs being suspended for the year for everybody, required minimum distributions, that is, right? There's some very interesting things that if you take the time to think about it and figure out ways to reduce the taxes, and when I say reduce taxes, it's not necessarily this year, but is the strategy that I'm deploying, and the strategy is defined by either it's multiple financial products coming together. That's a strategy, okay? Is the strategy that I'm deploying increasing my taxes or decreasing my taxes? And you want it to be decreasing taxes in the future. Most plans do the exact opposite. They're completely exposing more and more money to future taxation at an unknown rate. And I don't know about you, but with all the government infusion and PPP, I think taxes are going to go up.
I would agree with you.
Just my opinion.
Trillions of dollars. So, it's funny, and we talk about this leads to strategy, right? And if you're into football, the Tampa Bay Buccaneers, they got Tom Brady now to be their quarterback, right? And everybody's so excited, right? What made it even better? They brought Gronk back. And Gronk is now the player, right? So as you were saying, it's not one financial product. It's not one quarterback, right? I get different pieces to work better together. I potentially have a much better outcome, right? So
right, those guys are so gelled. You take another 3 players from the Patriots and you move them over to the Bucs. Holy crap!
Right. So I was just thinking of that analogy when you were sitting there talking about it, like how we always talk about the coordinated strategy and then having multiple things going on. Well, that's they're doing multiple things to try and be successful down there. So
right, and this is like this conversation. We've gone longer talking about it than we normally do.
Yeah,
with the individual, but this is the depth that goes on, and it's knowing the family, knowing the income, knowing where the taxes are. I mean, I'm never satisfied with my tax return. I always think we could have done better. And I look back at, well, if I had made this move during the year, we could do that. Like tax loss harvesting in a portfolio. what a great opportunity we had right now to do it. We saw it in 18. We saw it, you see it all the time. And if you're not proactively doing things like that in your financial strategy, you're not doing that. But it's even the basics of, strategy is not maximizing tax benefits. And it's the use of money and the efficient use of money that I think is the most important part of the plan. And you can't make a recommendation without understanding the tax consequences of it. And you got to look at the big picture. Like, the whole idea is to keep people in, low tax brackets as you possibly can. But sometimes it makes sense just simply to pay taxes because of where you are. I mean, think about the new tax law that Trump put out when you start thinking about capital gains. If you're married filing joint and you have income below $80,000 adjusted gross income, the capital gain rate is 0%. People don't know that. So you could literally, on a lot of clients, you could literally be taking gains where they believe they're in this 20% bracket. You're not getting to the 20% capital gain rate till 496,000 married filing joint, right? So it's like, it might make sense to take some of those taxes and reposition it and put it somewhere else. I don't know, right? You have to go through that conversation, but that's the analysis. That's the depth of what's going on. And what I kind of want to do is I want to run through the other components relatively quickly. And I kind of want to end it here and then come back and do another episode, because there's a lot of content that we're talking about. And I think it's a really good idea to break it down. But like, when you start talking about the 9 principles, we got family, we got income, we got taxes, we've got savings. Savings rate is the most important part of any financial strategy because the relationships with it. I have the new book coming out in literally 15 days. It's Your Wealth, Keep It, right? And one of the things that I do in the book is I talk about the saver, and it's all with the same rate of return, right? It doesn't matter what the rate of return is, but somebody saves, 2%, 5%, 10%, 15%, and 20% of their income. The results are staggering, right? But the reality is, we all talk about the distribution rates that are relative, that you need to take from your portfolio when you retire. We all know that the distribution rate comes down to it. Well, the undersaver, the person who can't save enough money, always has to take a higher distribution rate from his portfolio or her portfolio in retirement, because you've been training yourself for that way. So the key that, as we go through these things, understanding the savings, understanding where the savings comes from, understanding how much flexibility do you have in the savings rate. And in this moment, when you start thinking about the dynamics of the income, if the income's breaking down, well, I can drop my savings temporarily if it's the right amount, and maybe that I don't have to change the lifestyle. But if the savings rate's low, guess what? The lifestyle's high. So I think it's really, really important. Then, debts right now, what an opportunity. Interest rates are 40-year lows, right? 40, 45-year lows, the lowest,
Yeah,
the treasury's the lowest it's ever been. I remember when in February, the 10-year hit 1.31. That was the lowest it ever has been. It hit 0.5, or lower. It's at 0.6 right now. What a great time to rethink your debt structure and get these rates locked in at lower rates. But it's this component of income minus taxes minus the savings rate minus the debt structure should equal lifestyle, right? It's a lot. If there's credit card debt, maybe it doesn't. But this is the point where getting this control over where we are and measuring everything is going to lead to that success. And then, how are your assets structured? Do you have savings? Do you have enough savings? Is there enough liquid opportunity fund? Is there enough structured in retirement? Is there enough in real estate and business? Are we overweight anywhere? And then you got the future outflows. I mean, future inflows, future outflows. Colleges. I'm having that conversation right now, right? How much conversation have you had with people in the last 30 days about Sally's going off to college? What should I do? Right? I mean, I was talking to my youngest son last night. He's like, if the fall is going to be online classes, I don't want to do that. I want to take a gap year. I was like, really? But what's interesting about that is he said he just can't. He gets so much from being in the classroom, and that the way he learns from the interaction with the instructors and everybody, that's where he gets his benefit from. He's not getting the same value in an online education. He's like, should I pay that much for an online education? It's like, I like this conversation. I like where this is going. But it's, so, it's the defense. How well have we protected? This is an unbelievable opportunity right now to get all that, the umbrellas, the long-term care, the disability insurance, the life insurance, the wills, getting all that organized in the way that's right for you is what we're focused on. So, the guide is something that's available. If you're listening to the podcast, the guide to financial pressure is available for download. There's a link on the podcast. It's on our homepage, smallwoodwealth.com. It's an email download so you can grab it. Just have to give us your name, email address, and cell phone number so we make sure that we're not some bot that we're giving it out to. But one of the things that I want to encourage everybody to do is to think through this conversation, think through the value of the conversation, and then having this type of conversation on a regular basis with a group of people that you find value in, and how valuable it would be to do that over the next 3 months, 6 months, 2 years, 5 years, 10 years, right? How different could your plan be moving forward by making these really good, because the conversation leads to action, right? Good conversation. Is it Charles Deming that they talk about? Who was a wonderful strategist. I think he talks about, 90% of solving a problem is understanding what the problem is. Most people, it's like fire, aim, ready, as opposed to ready, aim, fire. I'm excited about getting the conversation out. I'm excited about the conversations I've been having with so many people. I'm scared about the future, but I'm really excited that technology and everything is going to be fantastic.
Agreed.
And going to go forward. So, really good today. Any closing words before we end this?
No, it just you summarized it pretty well. Like the conversations are even more, not I hate to say it, are even more important. Like, things change, and so this conversation keeps coming up. We all know change is part of life, and if you don't, get comfortable with it, because it is. I wasn't a big change person. I'm very comfortable with it now, because I understand that everything changes. So when things are starting to change, like you said, all of a sudden mom's moving in with you now, and that's a different expense, whatever. Things are happening, whether in your plan. So, revisiting this conversation with our existing clients is always, we don't necessarily have to use this form. We've kind of know them already, but it's the same thing. It's the same conversation. So,
and the form is really a guide for people to kind of walk through. It's it's a thinking tool is really what it comes down to.
Yeah.
And
Right.
it allows us to kind of stay on track also too. I think that's really
Yeah.
the important side of it.
And when people have been working with us, they kind of know they know us, so they know we're kind of walking through these different principles and different we call sectors. So no, besides that, I think things will be different. I'm optimistic that I don't live I live life in faith and not fear. So I got to believe that. So
Yeah, I would agree too. So a couple things I want to close with. On the website, we have buttons that are available to basically link to our schedules to create what we call a wealth curve conversation. I invite you to take advantage of that. It's free, no obligation. We have the download for this. We have an opportunity to request a free copy of our 5 Ways Your Wealth Under Attack book. We will be putting out the book, the It's Your Wealth, Keep It, sometime May, early June. That'll be out. That'll be available. We have a weekly webinar. You can subscribe to our newsletter, which is a print and email newsletter. They're separate emails. They're separate newsletters because there's enough content in there. So there's a lot in the podcast. If you haven't subscribed to the podcast, please do so on your favorite listening podcast streaming area. Share the podcast with as many people as you possibly can. If you have an idea for the podcast, we want to hear it. If you think we should interview somebody or talk to somebody, I'd love to do that also. And again, we're here for you, and we look forward to having a conversation with you about financial pressure. Thank you.
Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.